Welcome back, everyone, to another episode of Ready, Aim, Retire. I'm Rob Kirvan, your host, a show that we focused on everything retirement, kind of rolling it up to retirement and through retirement. And we try to find ways to help you out and give you some good content. As usual, I'm joined here with Tony Shore. Tony, how are we doing today?
I'm doing great. I'm so happy. I'm glowing today.
It looks
If you
like
didn't notice.
you're videoing like beside the sun. Are you like right beside the sun, or kind of like left or right of it? Like, what are we doing back there?
The
I
irony, the
Tony, is that
irony
you?
is, the irony is, I'm so bright that you guys should have worn shades. Is
Yes.
the deal? The irony is I'm sitting right next to, right over here. Troy, our guest today, is in the same room. He's right next to me, and look at how perfect he looks. I don't.
It's not unusual, Tony. Not unusual.
Yeah, he does look great. He does look great.
It's the lights. It's just the way they hit us in our new. We're in our new big studio, and we haven't gotten the curtains yet. And so once those come in, everything will be fine.
I like the couch. The couch looks pretty cool in the back there.
Oh yeah, that's for guests. Well, they wait for the show. We've got a guest couch back there for you, and if you come, you can take a nap on it, Rob.
Oh, nice. Okay, yeah. Good to know. Good to know. If I'm ever up in Minnesota, I will do that.
It's comfortable. Let me tell you, it's a comfortable couch. So anyway, yep, we're here in the new studios. You're in your new studio, and it looks fantastic, by the way.
Yeah, it's great. We got a couple things we're fixing, but otherwise, yeah, it's done great. I will tell you guys this before we go on to the show. So I just got back from Gulf Shores, Alabama.
Oh wow!
And my daughter was playing golf down there, watching her. Let me tell you, so my wife, she's always hot. Like it's hot. And it wasn't hot down there. It was like at nighttime, it was like, mid 30s, maybe it hit 40. Well, the first day we're there, she in the middle of the night, I'm a sound sleeper. Like got a little hot, decided to open the patio door to where our bedroom was. I woke up in the morning and I'm still getting over the cold. I had to sleep. There was another bedroom. It was like a Airbnb. Like I was coughing, like girls are putting, and I have to walk like 50 yards away because I can't stop coughing. I'm like coughing and blowing my nose, and I'm like, why would you do this? And then when I told her, I'm like, Natalie, I have to sleep in the other room. I go, like, I'm gonna be sick for weeks. She's like, oh, I won't open the window. I trusted her. I slept in the room again. That window got open again. She goes, I didn't think you'd notice. It was only a crack. I'm like, you're kidding me. You're killing me.
It's not your first trip with Natalie, is it?
Cough or sniffle or anything. That's kind of the reason behind. I want to preface.
You guys ever traveled together before? I mean, how long have you been married?
But you know what? I think this, it was in Gulf Shores. So we were at like I said, an Airbnb it was like a condo that was on the ocean, right? So she wanted to hear the water. Normally she doesn't want to hear the water, and she'll do something here and there, but it got cold at night. It was like like I said, in the 30s. So we travel together, we live together, and it I go to bed usually at night with like track pants and a hoodie on, because I know it's going to be cold, so sometimes a winter hat, and she's just perfect the way she is. So
you just want to be ready for your workout in the morning, just like
get out of that. Oh, yeah, that's true. All right. So that was my preface. I was only saying that in case I started coughing, so the viewers would know this. But what I want to do today is we talk, last week we had Keith Gango on, which was fantastic. He was talking about the core select, more of the money in actively managed portfolios that we do. And today I wanted to bring on Troy McCrady. And Troy McCrady, I've worked with him for probably a decade now directly. For those of you out there that you get compasses, that we do compasses, Troy and I literally work on them directly. They don't go to the self-checkout like people want you to do. No, it's me and Troy directly making changes, tweaking things. Troy's very, very good at that. But his real forte is more on the insurance side. So in any portfolio, if it's, if a fiduciary is looking at it, you're going to have, the investment side, you're going to have the insurance side, maybe some legacy side, depending on kind of, what your position is and what your setup is. And Troy has been, on the insurance side. So Troy has been, helpful, many of you listening, have inadvertently used, some of his recommendations, maybe not knowing it, but he comes out with the newest stuff, the things that are the latest and greatest, and things that can help our clients out. So, first of all, welcome, Troy. Love having you.
Were you talking about the same Troy I know? I mean, that was
Tony,
Yeah.
Tony,
That's the
let
Troy.
it keep going. Let it keep going.
I see the Troy behind the scenes. Maybe you see him in front of the scenes. So
no, Troy is great. Yeah.
yes, he's good people. So Troy, let's first just find out a little bit about Troy. So where did you grow up? Like, you're obviously in Minnesota, so I'm guessing Minnesota, but
I'm in Minnesota. I grew up
Yep.
in Minnesota. I tried to leave Minnesota once or twice, and unfortunately, I was the snow kept me here. You call it Minnesota. It's going to be a little bit accurate on that this weekend, but yeah. So born and raised here in Minnesota. Live in a nice little community called White Bear Lake.
oh,
Yeah, just not too far from the Gradient Financial offices, so it's a nice little commute. But been here my entire life, Rob.
okay. And I did hear you're getting snow this weekend, which
We are
is
supposed to get a little snow tonight and a little bit more on Sunday.
yeah. We got a little dusting last night, and I was like, it wasn't going to be over. So then that's.
I was hoping it
I'm
was
not even going to
over,
comment on it because I hate the snow. So
They
You and
said
I
up to,
both.
up to 6 inches on Sunday.
Well, I heard more, but
Oh, boy.
it's gonna be a long weekend, Tony. Unfortunately,
Yeah, I think it is.
Well,
Unfortunately,
we'll work from home on Monday, I'm guessing, for a lot of the staff there. So I'll
That's
make sure I get everything done on Friday. just in
That's
case.
right.
All right, so you're a Minnesota guy, White Bear Lake guy. I know I watched them in the state championship, rooting them on. They didn't quite get to where we needed them to get to.
The curse is still alive.
Yeah, but
Yep.
we got next year. We always
Yep,
got
we
next
do.
year.
Always got next year.
At Gradient, you're on the insurance side. So the insurance side, there's two components. We're going to focus on one today. Well, there's probably three components really, but you have life insurance, for either, household, legacy. There's several avenues we can go down with that. There's obviously health insurance, several avenues that you can go down with that. But you're more on the annuity side, and the annuity, people love an annuity when they're getting their pension, which is basically an annuity. But sometimes people don't understand what an annuity is. They don't understand, like, what does that even actually mean? Can you give us a rundown of what, give us an overview of what an annuity is?
Yeah, absolutely.
There's tons of them, but just, give us, help us understand.
Absolutely. Simply put, Rob, an annuity is essentially a contract between you, the annuitant, and an insurance company. And within that contract, there may be benefits such as lifetime income streams or withdrawal strategies and things of that nature. But essentially, it's a contract between you and an insurance company.
Okay. And so it's a contract between you and the insurance company, which is great. So and we use them here. When you're looking at like features and benefits, if I look at a plain Jane annuity, let's compare it to like a CD, Troy.
Sure.
So a CD gives you good interest rate. We sent a lot of clients over the last, I want to say, year, when these CD rates were jumping and they were low duration, 11 months, 14 months, things like that, paying, pretty good interest rates. But a couple of them got caught, Troy, in January because they got a 1099. And we had one client that interest, even though you're not touching it with a certificate of deposit, you get taxed on it.
Correct.
Annuity, you do not, right?
Correct. Well, you get taxed, but it just happens to be a little bit later on. So, outside of the added benefits that we talked about, or that we can mention here about annuities and downside protection and things of that nature, the biggest benefit, in my opinion, is the tax deferral versus the CD, as you just mentioned, which is taxable. It's annualized taxation. With the annuity, it's tax deferred. So, that's one big difference between a certificate of deposit versus a potential annuity. Another thing is, like I said, it's tax deferred, meaning the annuity, you're only taxed once you start to take withdrawals from that. So, you can let that be tax deferred, for a long period of time. You're not required to, like you mentioned, get that 1099 like you are on that CD after the duration of that CD.
Right. And they come up, they come up automatically, they renew. And so to me, that's a really big one. The other thing is, over the, with the annuity side is you get the tax deferred growth. Let's say it's a 5-year term, because the terms are generally longer, right? Than the CD. Like a CD, a lot of times you can get 6-month CDs and, up to 14 months. And, you don't see too much currently, over 14, maybe 18 months, only because, as we heard yesterday from the Federal Reserve, they're planning on 3 interest rate cuts this year. And what interest rate cuts do is obviously they're going to lower CD rates, fixed annuity rates, things like that, right? So when banks give you a low duration, it's because they know it's going to renew at a lower amount, right?
Correct.
Let's talk about what do we want to talk about? I just lost my train of thought, Troy. Generally, when you see like annuities, we like, for us, when we use them as part of an overall strategy, an overall portfolio. So we have the, what I would call the yellow money, the risk money, and then the green money. When we're looking at annuities, it's principally protected, and I got to put the disclaimer through the claims, ability of the insurance company, obviously, but we only use great companies, so we're hopeful that doesn't happen. But the principal is protected, similar to a CD, which is great. But what I've noticed, Troy, is over the past, and you've helped me with this over the past 6 months, 7 months, is we've been doing a lot of what we've called upgrading or refinancing annuity contracts. And tell us a bit about that, or what you've seen with the increase in interest rates in the new products, and the just the chances that people will have to do stuff like that.
Correct. So, as we have been in this, well, it's not historically but high, but it's a higher interest rate than what we have been in over the last handful of years. So a lot of your clients, they came to you years ago, and the annuity was a good solution as part of their portfolio. The great thing about when interest rates go up is, assuming their needs haven't changed, we can sit there and look at a new type of annuity that may offer higher rates than their existing annuity. And we may have the ability to get them out of their existing annuity and put them in a new annuity that offers higher earning potential. Another area of refinancing that annuity is for some situations, clients have come to you years after they've gotten into that annuity, and maybe their needs have changed for that bucket of money. So it's also an opportunity for those types of folks to, if their needs have changed, where maybe they were going to plan on utilizing this annuity for lifetime income, and through maybe the passing of a relative, there was a windfall of more money, that they no longer need this benefit, this lifetime income benefit. So we have the ability in that situation to potentially get them out of, because their needs have changed, put them in a solution that's more fitting to what their needs are now. So we have had the ability to, and a lot of those opportunities are because of interest rates and where they are today versus where they were a handful of years ago.
Right. And we've done a lot together, even with clients that were going to utilize income, and yeah, their needs may have changed slightly. But the other thing that is available, because the new rates were so much higher than their other rate, and they're paying fees on contracts and things like that, we were able to kind of go, okay, we can do the exact same thing with better accumulation, with a zero fee, with kind of a more bells and whistles that we really haven't seen. It's been years. Like, it's got to be like a decade, at least, or more.
Well, probably more than that. Yep.
Probably more than that, because a lot of the ones that we upgraded, like, their fixed rates were at 1%. They cap rates of 1.5% or 2%. And then a lot of these new ones have, 3%, 4% fixed rate, 5% fixed rates, on some of them. And the cap rates are, 6 to, I've seen as high as 11%, so the, it's really an interesting time to take a look at stuff like that. And even for new clients coming in, like they're coming out of the gate with the best of the best. And I suspect that when these interest rate cuts start to go into play, which now they're pricing one in for June, which if I didn't hear him speak yesterday, I would have said there's no way there's one in June because the way the economy is going, the unemployment is pretty low. But we'll probably see rates start to cut. Now, have you seen anything from your side from insurance companies starting to lower some of those fixed rates or cap rates or anything like that?
We have. Insurance companies will typically follow the lead indicators for insurance companies are things like the 10-year treasury or in the 2-year treasury. And if we look back to October of last year, we had seen 10-year treasuries, close to 5%. We've seen 2-year treasuries close to, 5.25%. Those rates have dropped between that period of time and today, where there's still the 10-year treasury is still above 4%. The 2-year treasury is still above that as well. So insurance companies will typically look at those treasury bonds as leading indicators. So as we've come back down a little bit, we're still in a very, very good environment. Those carriers have started to adjust their rates, such as fixed rates and caps and things of that nature. So we are sliding a little bit, and insurance companies are adjusting accordingly, but we are still in a very, very, very good situation.
Yeah, I would agree. I would agree that like the rates have just been super favorable, and even when we're doing like an allocation, in our overall strategies or portfolios, bonds, they just haven't done a heck of a lot over the last several years. I guess that's the 10-year period also. Even last year, they weren't, they weren't doing what a bond normally does. Now they did raise interest rates all the way till July, so so that puts pressure on them. But there's one, there's several, but I'm going to focus on one just to give like an overview so people can understand what the annuity is that we're talking about is. There's one that's a 5-year annuity, Troy, that we do a lot of, that has currently a 5% fixed rate. And when we're looking at an allocation inside someone's portfolio and we know, hey, we can get a 5% fixed rate, what I would call a no risk return, and then couple that with your growth side, the stuff that's going to bounce around in the market. But people that know me know I'm a big market believer, so I know over time that's going to benefit you. But to have that safe money inside of your overall strategy makes sense. But what I like about that one, Troy, is you're saying how insurance companies, they will eventually drop. We know banks will eventually drop the CD rates, as these things come. If we have 3 cuts this year and we look out to next year, you're probably going to get 2 or 3 cuts next year, and it's going to kind of follow this interest rate cutting cycle. But what I like about the one that we've done a lot of, as far as an allocation is it has a 5% fixed, but the guaranteed fixed rate of the contract is 3%. So if everything goes, everything goes terrible, everything goes up in the air, it's 3%. So if I look at my money and go, okay, 5 years, what does that look like? Well, if rates go down significantly, 3 is going to be very good. 4 is going to be fantastic, and 5 is going to be amazing. And they generally don't move rates around a lot when you have a contract. But if they had to, if we got into a tough situation, in the economy, you still have this 3% fixed, which I don't think I've seen anything like it. Have you, Troy?
I have not. And now you look back at, like you'd mentioned, currently at about 5%, and with a floor of 3%, that's still very, very good compared to what we were looking at product wise, just a handful of years ago. So to your point, even when rates still come, if they start to come back down at a greater percentage, these products are still built to give the client some very, very nice returns.
Right. And you have, like you said, you have the floor on it, so you can't lose anything. Again, based on the claims paying ability of the insurance company. We like to throw that in every time, but you're not losing anything. And you're right. Like if 3%, if the market goes down, interest rates go crazy, and if everything happens wrong, and I still have 3%, with my money that I can't lose value on, that's a pretty good deal. And for a lot of clients I deal with, that are coming into retirement or in retirement, a lot of them will say to me, you know what, I got it. I don't want to lose it. I've already taken the risk. I don't want to lose it. Now, I'm not a big, it's got to be all on this side or that side. I don't know, operate like that. I am a fiduciary, so we got to look at things fair and balanced. But as part of an overall portfolio, it's definitely something to look at, and it's something to look at for clients that are going, hey, from an allocation standpoint, this can make sense. And then even like we said earlier, the ability to upgrade these things right now, it's phenomenal, and life changes, and we've seen it, and I've seen it with clients over, with 10, 12 years that things just kind of happen, that you don't need maybe what was offered here, but this looks more attractive, and now you're getting a better interest rate, and now you're into something that's probably going to benefit you and your family a lot more. So definitely something to look at, folks. If you're out there and you're listening and you're like, geez, you know what, I wonder if mine has, if I can upgrade it or refinance it or however you want to term it, you can definitely, give us a call and bring it in. If you call, at 630-780-1099, Natalie will book you in, sit down, and we'll do what's called an annuity review. And we'll look at it and we'll see what the options are with it. And you know what? Like I said, I am a fiduciary. So sometimes it's as good as it's going to get, if you're taking income right now, it's probably as good as it's going to get. Although we did have one a few weeks ago that they were taking income and we were able to get them more income because of the interest rates. So that was actually the first I've even seen of that, Troy, where these clients of mine have been clients for years. Were like, hey, you know what? Why don't we just see if these interest rates can affect the income that they've been currently getting? And we were able to raise their income, whatever the number was, but it was north. So that was positive.
Yeah, no, absolutely. I mean, to anyone out there who has an existing annuity, it's always, in my opinion, it's always worth having that conversation to see if there is something better out there, something that can improve your situation. So to your point, Rob, whether or not it's income, whether or not it's, can we get better growth potential, having that type of conversation is always a valuable tool. And in today's environment, like we have discussed earlier, it's a great opportunity for a lot of folks to improve their situation.
Right. And when we look on the investment side, Troy, so usually when clients come in and we're reviewing what they're doing and we're reviewing their overall plan, the focus is a lot on the investment side, because that's the side that goes like this, so that's the side that kind of gives people angst and gets people kind of like, oh, Rob, the election's coming, or this is coming, or that's coming, or this just happened. And it gives people a little bit of like trepidation, right? And they forget about the annuity side. So if they have one, it's just kind of over here in this corner, and it's like set it and forget it, and over the past several years, that's kind of been the move, only because there wasn't an alternative, that's kind of as good as it was going to get. But like, you're right, with these interest rates, what you said is well spoken of, like, hey, pay attention to the whole thing. When you come in or call or say, you know what, I want to get an annuity review. Does mine, can I upgrade mine? Can I refinance mine? And let us take a look at it. And better yet, let Troy take a look at it, because he does everything behind the scenes. So
we'll look at it together, Rob. We'll look at it together.
Troy will do the heavy lifting, and then he will say, Rob, here's some great options, and then we'll talk it through. But yeah, you don't clients will see Troy at client events, coming around, walking around, and saying things, but he rarely gets up on stage. He is the safe money guy, I guess. He's just kind of like,
we are the safe money. We are the safe money people. We to your point earlier, the annuity fits for a lot of folks and as part of their portfolio, and and it's not an all or nothing, to your point, as being a fiduciary. It's just one of the tools that you utilize with your client base when it's the right fit for those folks. But one of the things that we really enjoy are meeting your clients at your holiday party. And we leave the stage for Binger because, Mike likes to talk, and, there wouldn't be any more time for me. I mean, to be honest, we'd be there all night. So
the band wouldn't get on, nobody would be dancing. Mike has never met a microphone he hasn't fallen in love with. I'll tell you that.
Or stage. I mean, that guy just loves to be in front of folks.
He does. He does. He does a great job, but he definitely loves it. But I guess that's a good point. Is like, yeah, if we got you up there too, what's left of the evening? There's nothing left. We got
Not much.
we got no music, we got nothing. But it's good to know, folks. And I wanted to introduce you today to Troy. And I'm sure throughout the year we'll have him back on again. But we're in a very interesting time with these interest rates, and I would encourage people to give us a call at 630-780-1099 or go to our site at apadvisorsgroup.com. You can book an appointment right on there as well and get these things reviewed. Just like you look at your risk assets, look at your safe ones too. If you got money sitting in a bank and doing nothing, or saying, geez, where should I put this? There's tons of these types of options out there, and it's definitely worth looking at and taking advantage of this interest rate environment, because before you know it, it's going to be gone, and you'll look back and go, oh, shoulda, coulda, woulda. The rear view mirror is always crystal clear. But definitely give us a call and reach out to us. Troy, I want to thank you. Well, actually, I want to say one other thing too. So Troy is up in Minneapolis. I'm going to sidetrack, again, but he's up in Minneapolis, and as luck would have it, my daughter, Abby, that if you're a client, you know her, you can't help but know her. She is the first person that answers the phone, the first person that says hi, and really doesn't really stop smiling too much, that one. So she's fantastic in her role, but she's actually up in your offices, Troy, taking advantage of some training.
Absolutely. Absolutely.
So what's she learning up there?
Well, Rob, she's attending what we call our administrative university, which is designed to, give her some tools and some processes to help your office run a little bit more efficient, although you already run fairly efficient. So I think with her, she's going to be sharing some ideas that you folks use in your office with your clients, and she'll probably pick up a thing or two to bring back to the office. But she flew in yesterday, and she'll be here through tomorrow afternoon, and we're excited to have her here.
She told me, Troy, if there's a snowstorm, she's staying at your place tomorrow night. Is that factual, or?
I mean, we wouldn't be opposed to it. I mean, Lori, my wife, would be, of course, she's staying at the house, Troy,
Okay.
So yeah, I mean, Bogey, our dog might enjoy that as well. I mean, just having someone new in the house,
She could ride Bogey around, because that dog, what kind of dog is that? He's
a Great Dane. He's a Great Dane.
He's huge.
Right. Yeah, so she could do like little Bogey rides or whatever.
She can stay on the couch right here. She can stay in the radio room if she wants.
There you go. There's another spot for her. But the reason I ask is because the ancillary training that you guys have up there. And I told Abby, I go, listen, you better come back with 3 really good ideas that we can use, implement, help clients out with. I go, if you don't have 3, don't even bother. I go, because the whole room is filled. Like, if she showed me a room, there was a ton of people from all over the country coming in to kind of fine tune, get some new ideas, find different systems to keep in place, to keep everything smooth, which is what we always love here, to keep everything, on track. And we couldn't do what we do if we didn't have systems, in place. But hopefully this kind of even helps her out more, which is, it's fantastic that Gradient puts those kinds of things on and allows Abby to participate. I think that's fantastic.
Well, we're happy to be able to do it, and more importantly, we're happy to have her in the office for these couple of days. Now, one thing I do want to ask you, Rob, is, are you hoping that there's a snowstorm this weekend and she stays here? Because I've heard your weekend, if she does come home, is going to be a lot of painting of a new condo.
It's true. She purchased a condo a few weeks back, and then actually last Thursday. So she closed on it last Thursday. So I went to the closing. I'm her father, make sure everything is the way it should be. It was. And then I left Friday because I had to go to Emma's golf tournament in Gulf Shores. So I was like, Abby, don't worry. You get back from Minnesota, you got me all weekend. So I know for a fact I'm painting. I know I'm putting, she got a new bed. I'm putting that in. Natalie's going to be wallpapering, and then I'm sure on the decorating side. I'm not on the decorating side. I'm on the workhorse side. So we're going to have that thing ship shape because she's planning on hosting our family for Easter, which is the following weekend.
I was just going to say that.
That's let's see here. That's
now it's
Give
only
yourselves a lot of time.
It's only like me and Natalie and my three girls, but still, I have never seen Abby cook anything other than bacon and soup. So I'm not sure what that Thanksgiving meal is going to look like.
She's going to have it catered, and you'll notice the charge later on your card.
That's right.
Yeah, maybe. Anyways, I just want to thank you, Troy. I know you're a busy guy. Thanks for coming down, sitting with us, and going through that, because these are questions I get. So if I get the questions, I like to get someone on that can, to give us the answers, which you always do. Tony, we didn't get the jab back and forth today as much as normal, and maybe it's because I can barely see you with the sheen on your head, or maybe because I had a lot of stuff going on. But
the light. Well, hey, Rob, before we go, let our listeners know one more time how they can get a hold of you to set up that complimentary, no cost, no obligation consultation.
For sure. Give us a call at 630-780-1099 or go on our site at apadvisorsgroup.com. Either way, you can set up an appointment. Come on in, sit down with me. We'll look at your full situation. If there's something like, I got this old annuity you want to look at, we'll look at that too. We'll look at everything you got going on. But and next week, Tony, I have a very special guest.
Okay.
Very special guest. I have Natalie Kirvan.
Nice.
She's coming in. So we're going to have a series during this podcast, several times throughout the year. I'm actually going to bring a couple I work with, and I'm going to find out what their journey was like from the beginning, Tony, from the beginning. Where'd you start? How'd you meet? Tell us about the family. I want to know everything, I want to see what they did. I have super interest in things like that. So what I'm going to do next week is I'm putting Natalie on the hot seat. I'm asking her the questions that I'm going to ask the people, but I'm not going to show her the questions in advance. So I want to know, we met in high school. I want to know if she knows where that was, because I know where that was. So it should be a fun episode. And Natalie's always entertaining, so it should be a real good one to tune into. And it'll also be up on YouTube, and the podcast.
I absolutely cannot wait for that episode. That's going to be a good one. This was a great one. I mean, from Troy to Natalie, I know you have a lot of love for both.
I do.
But this week was Troy. Listeners, thanks for tuning in. Viewers, thanks for watching. That does it for today's episode of Ready, Aim, Retire with our host, Rob Kirvan.